Over the last 10 years, we have grown our business to now operate 2 world-class mines and concentrators, whilst we also have secured full ownership of the business. We indeed started 2021 with a record first half performance. The summary of our financial results for the period shows a strong performance despite the ongoing impact of the pandemic, with record 6-month financial performance on all major metrics. We posted a revenue of 9.6 billion rand for the period, an increase of 108% year on year, with a stronger pricing environment supported by increased sales volumes. Guided by a dividend policy of distributing a minimum of 10% of free cash flow before growth capex, and taking into account the strong balance sheet and cash flow generation already in the first half of 2021 rather, the board declared an interim gross cash dividend of 5.35 rand per share, equating to just over 1.5 billion rand in aggregate. This ensures that we remain in a position of strength and well placed to continue with appropriate value creating and disciplined investment in our business and sustainable capital returns to our shareholders. Prices and volumes are the major components that impacted our headline earnings variance year on year. Our basket price per platinum ounce increased nearly 52% to 66,202 rand per platinum ounce, or 42,600 per 4E ounce. This was assisted by stronger US dollar metal prices for all our major metals, offset by 20% strengthening of the rand. Yet again, the top performer in our revenue basket was rhodium, with the average rhodium price for the period increasing threefold to $25,388 per ounce. We capitalized on the strong performance in the rhodium price with a 33% increase in rhodium sales, assisted by the increased UG2 mix at our BRPM mine. Other metals also enjoyed double-digit price growth, with platinum reporting a strong increase of 53% period on period. The strong performance in rhodium price and sales volumes shifted rhodium's contribution to revenue from 30% last year to 45% during this period. Labour remains our biggest cost component, but reduced slightly to 39% with increased production from the more mechanised stale drift. Administrative expenses, as I noted, decreased 7.3% year on year, which includes a 5.6% reduction in our corporate cost to 92 million rand, assisted by the continued benefit of optimisation initiatives that commenced in 2020. Our industry membership and market development contributions decreased by 35% to 22 million rand, mostly due to the stronger exchange rate that reduced the impact of US dollar contributions. Other costs were also marginally lower than in the previous period. Our interim dividend of 5.35 rand per share represents 47% of free cash flow during the period, and will be a further capital return to shareholders of 1.5 billion, bringing the total for the period to just over 2 billion rand. In summary, I trust that the financial results provided you with some insight into what has been a strong performance across the business. Our continued transformation is evident in the 15.5% return on capital over the period, and we also further strengthened our balance sheet by settling and delisting our convertible bond. We recorded strong financial performance on just about all metrics, with record EBITDA for the 6 months in aggregate and individually for BRPM and stale drift. Capital allocation remains a critical focus, and our strong liquidity and funding position supports further sustainable shareholder returns. Our finance focus areas for 2021 remains an ongoing focus on the financial health and the liquidity of our business, the delivery of our supply chain projects with nearly 200 million rand per year of targeted savings, as well as the continued rollout of the digital roadmap, which will support continued efficiency gains in our business.